So request all the viewers to be with us, and we are here to share the knowledge what's related to accounting and finance, what we have and what we can. We have the one email from one of our viewers, and he asked us to create the content on this. This is related to the SaaS, that's the software as services, R2R interview questions, that's real technical questions on deferred and unbilled revenue. We are going to discuss with Santosh Phulse. Coming back to these questions, this is a one technical interview questions asked in interview, and that's added into the assessment test and asked to put it down the journal entries for that. That's all we are going to discuss here. Fortunately, we have this logo is on my name. This Accounts Gurukul Learn Accounting Online. So this trademark, this R, it means this is registered on my name, and I have the trademark for this. In addition to that, we have the domain as well related to accountsgurukul.com and accountsgurukul.in. That's also on our name. We have created the websites as well. That's accountsgurukul.com. And you can go through with that websites. You are able to get more details from there. In addition to that, if you guys are looking for any sort of training related to accounting and finance, you can connect with us on our email ID. That's accounts.gurukul@yahoo.com. So now we have the one content uploaded on our YouTube channel. That's 60% probability is going to be crack an interview if you are able to give the answer for that questions. In consideration to that, and it's already informed in our earlier contents as well, mentioning that now the trend for asking the questions is changed. Instead of going through with the multiple questions, if we do the adjustment and we create the such kind of questions in which in one questions we are able to ask you to give the answers for our multiple concept related to R2R. So considering that, this is also in the same way in these questions, the software as services team ask in assessment test, that's explain the term of deferred and unbilled revenue with journal entries and added the one case study for that and how you're going to write the answer for that. So we are going to jump towards that to know what sort of questions is there, how you have to give the answer for that, how it's going to be the more clarifications you are able to get from that. So request all the viewers to be a part of Accounts Gurukul. Do the support to us and be with us to have a more insight about accounting and finance. We have the 20 years plus experience, and whatever we have, that's all we are here to share with all of our viewers. And that's all is based on the actual and real experience. And whatever we are going to do on every day based on that, we are going to share the knowledge with all of our viewers. So your support is going to be more needed now, knowing that our old channels has already been hacked. So keep loving, keep liking, and keep supporting Accounts Gurukul and Santosh Phulse. We'll jump to that to know what the question is asked. Before going to see the answer for this is the question. And what you have to do is that you have to take a pause. You have to write down the answers from your end. You have to note it down the journal entries. And you have to come back and see either your answer is correct or not. And if it's not, then only you have to go through with this content and know more about this. And if your answer is correct, just go back, match, come here, see, and jump towards the next content. Don't spend your time the things which you already aware about that, know about that. If it's something is new, then you have to spend a time for that, because at the end of the day, time is limited. Now, coming back to these questions, is that this question is asked in SaaS company, what is the deferred revenue, unbilled revenue, and journal entries at each stage? As a service provider is TDLLP, service receiver is accounts Gurukul, date of invoice is 23rd Jan 2025, and product is subscription charges, serial number, item, period, quantity, rate, basic amount, and total including IGST amount. We are assuming that this invoice is raised from DDLLP, and that we are able to know that when we are going to give the interview, and this service provider is that organization's name of that organizations, then we have to assume that it's related to the deferred revenue and unbilled revenue from that service provider standpoint. And knowing that term itself, the deferred revenue and unbilled revenue is going to add into the service provider itself, not the service receiver. Now, and if still have any doubt, then you have to ask. Okay, so coming back to this, the serial number first, atom, what atom code is added over there, period, for how many period the subscription charges is provided, what's the quantity for that each quantity is considered the 1 month. If the invoice is for the Jan to March, it's 3 month. Rate, that's a per month rate. Basic, it's rate into quantity, and total including IGST 18%, that's basic plus 18% IGST. Now, the first thing is that what is deferred revenue? So deferred revenue, it means that the revenue, the deferred revenue, it means the revenue for which we have raised the invoice, but we haven't yet provided the services and delivered the goods. Okay, wait. Okay, so the deferred revenue, it means that the revenue for which we have raised the invoice, but we haven't yet provided the services and or delivered the goods. This is going to be provided the services or delivered the goods. It means that we raise the invoice. If you see here, this is the subscription charges for the period of, it's mentioned Jan to March 25. Invoice date, so we have raised the invoice on 23rd Jan 2025. So we have raised the invoice on 23rd Jan. The service period, that subscription charges for the period of Jan to March. So it means we haven't yet provided the services, deliver the goods for the period of Feb to March, but still we raised the invoice on 23rd Jan 2025. Now, as per that definitions of the deferred revenue, as per the concept of that deferred revenue, it means the revenue for which we have raised the invoice, but we haven't yet provided the services. So here we have raised the invoice on 23rd Jan, but for the period of Jan to March, we have raised the invoice for future period, but we haven't yet provided the services. So that the revenue, what's pertaining to the future period, that's going to treat as an deferred revenue for us. And what does it mean by that? So we are raising the invoice, giving the commitment, we are going to deliver the services. It means the commitment comes with liability. The commitment comes with liability. So we have the liability to deliver the services for that period. And until and unless we haven't delivered that services, that's not going to be treat for us as in revenue. So here the concept is depend upon the delivery of services. As per your AS9, accounting standard 9, let's talk about revenue recognitions. When you are liable to recognize the revenue. So, sorry. So as and when you provided the services, then only you have the right to recognize that as in revenue. If you raise the invoice, but you haven't provided the services for that, you don't have a right to recognize that as in revenue. So as per that the revenue for which you raise the invoice against that the services is not delivered, that's going to be treated as a deferred revenue. Now the next is towards the concept of unbilled revenue. So the unbilled, that word itself is going to explain that unbilled, we haven't yet billed, that's unbilled revenue. So unbilled revenue, it means we have delivered the services, but we haven't raised the invoice. Now, if you see the term of unbilled revenue, so here we have provided the services, we have rendered the services, we have delivered the goods, but we haven't raised the invoice for that. That's the meaning of your unbilled revenue. And it's opposite to that. Deferred revenue, it means we raise the invoice, but we haven't delivered the services. In unbilled revenue, we deliver the services, but we haven't raised the invoice. That's the unbilled revenue. The unbilled revenue, knowing that we already deliver the services, so that's asset for us. Unbilled revenue is asset for us. And the deferred revenue comes with commitment and to honor the delivery of services. So that's the liability on us. So deferred revenue is liability and unbilled revenue is our asset. Now, as per the accrual concept, the revenue you have to book as and when that's earned, as and when you earn that revenue. So in the month of December, this is the first we are going to discuss now, serial number first. For the December 24 to 31st December 24, we have provided the services. That's the subscription charges for December to 1st December to 31st December. That's the 68,000. But we raise the invoice for all on 23rd Jan 2025. So it means when we are doing the closure for the month of December, we have to recognize in the books of account as an unbilled revenue. So your journal entry is going to be, that's unbilled revenue assets account debit to your revenue or unbilled revenue income account credit. So this entry you have to do as on 31st December 24. This is only for your basic amount. That's the unbilled revenue assets account debit to unbilled revenue income account credit. That's the 68,000, 68,000. Now, this is the entry you have to do in the books of account. And why it's going to be says unbilled revenue income. So that's not that income for that income, we haven't yet raised the invoice. So that's going to be says this is unbilled revenue in P&L for which we haven't yet billed. And if you're going to do here is that unbilled revenue assets account debit to revenue account. So it means you are going to credit to your revenue and you are assuming that this revenue is earned. You earn and you are assuming that the invoice also it's raised for that. And actually you are hitting towards the revenue account. So to have the bifurcation towards that, till the time you are not going to raise the actual invoice, so you have to park this towards the unbilled revenue income. So it's going to be give the clarifications when we are preparing the schedules for that, when we are going to do the reconciliations with the GST, how much is revenue we reported to the GST, then we are able to know there is something is unbilled revenue. We have the balance sheets as well. From that, we are able to know. But in the P&L also, we have to keep it that as a separate. But if you are hitting towards the revenue, that also is okay. But it's advisable to keep it separate as an unbilled revenue asset account debit to unbilled revenue income account credit. Now the next one towards when you are going to raise the invoice on 23rd Jan. Now the next stage here is that to raise the invoice, and you raise the invoice on 23rd of Jan 2025. So when you raise the invoice on 23rd, then your AR team, that's the 23rd Jan 2025. So this entry is pertaining to the R2R team. Now this one is related to AR team. When the AR team, that's O2C team, is raising the invoice, then your entry is going to be that we are raising the invoice on the accounts Gurukul. So accounts Gurukul account debit, and this is going to be debit with all total gross amount, that's 10,54,625 to your revenue account debit. Revenue account is credit to your output IGST at the rate of 18%. That's a credit. This output GST is going to be the liability on us. So your basic amount is 8,93,750 and IGST is 18% on this. So it's going to be 1,60,000. So if you see the total amount, the gross amount for your invoice is 10,54,000. This much is going to be the recoverable from accounts Gurukul account. That's a debit. Now, this is the way it's going to be work in ERP. So that's the accounts Gurukul account debit, revenue account credit to output IGST account credit. The second, when you have this entry in the systems from the AR team, then R2R team is going to come into the pictures. So if you want to do here the club, that's a combined entry, since we are following the ERP and we are giving the interview for R2R. So the combined entry is different. And when it's booking from the AR team, so AR team is not going to do that entry. AR team is not going to be work how much is your unbilled revenue is already there, how much is your deferred revenue, how much is actual revenue for that month. So the AR team is not responsible for that. So AR team is going to straightway raise the invoice, and in system the entry is going to be that your customer account debit to revenue account credit to your tax payable account credit. That's the entry is going to be. Now, when it's coming towards the R2R, again, when we are closing the month in for our Jan 25th, when we are doing the closure of this month, that's Jan 25th, on 31st of Jan, your entry, first what you have to do is that as per the unbilled revenue, as on 31st of December, you already have the unbilled revenue asset account debit to unbilled revenue income account credit. That's the 68,000. Now, if you see, the invoice is raised for all the amount for the December as well as for the Jan and for the future period as well. So what you have to do? You have to do the reversal of this entry. So you are going to do that unbilled revenue income account debit to unbilled revenue asset account credit. So this 68,000 is going to do the reversal here. This is reversal of revenue for the month of December, knowing that you raise the invoice for that. Now the next, this is pertaining to your unbilled. How you recognize the unbilled revenue on 31st December 24, and now when you are going to do the reversal for that. As and when the invoice is raised, you have to do the reversal of your unbilled revenue. Now the next is going towards as on 31st Jan 25. Second is the deferred revenue. The deferred revenue, the another name of this as an unearned revenue, the revenue which we haven't yet earned. So that's also is going to be the another nomenclature for deferred revenue. The next, since it has deferred revenue, so as per that concept, you have raised the invoice. So as on 23rd Jan, you raise the invoice for the services December to March. December is already over, so you are not going to do the reversal of December revenue. So it's already reversed in Jan and booked in December. Next, for the month of Jan, you are closing the books as on 31st Jan. So for the month of Jan, the revenue is going to be remain as it is in the books of account. So you have to do the reversal only for the month of Feb and March. That's your deferred revenue. So what you have to do is that this is going to be for your, this you can see, okay, and this is pertaining to your Jan. So 5,50,500, the revenue pertaining to Feb and March, you have to park towards the deferred revenue and you have to reclassify it from P&L to deferred revenue. So your next entry is going to be that your revenue account is debit to your deferred revenue account is going to credit, and this is for Feb and March. When you are going to do the closure for Feb, now you are on Feb, you are doing the closure for the month of Feb. So whatever the revenue pertaining to the Feb, that you have to do the booking in books of account. So you have to do the debit to your deferred revenue account, and you have to credit to your revenue account. And this is pertaining to your Feb month. That's a 2,75,250. And same, you have to do the one more entry as on March. That's the same, deferred revenue account debit to revenue account credit. So that's the way you have to plot the journal entries for that. Now, if you see here, in December, you have the unbilled revenue. That's a revenue with 68,000 is booked. Here, your revenue account is credit. That's 8,93,750. Against this, you have done the reversal of this unbilled revenue income. That's a 68,000 less. This is pertaining to the deferred revenue. You have debited the revenue account for 5,50,000. So if you see here, the net revenue is there in the month of Jan. That's 2,75,250, and that's pertaining to your 1 month revenue, 275,250. In next month, again, you have the 275,250, and for the March as well, you have the 275,250. And in December, you have 68,000. So if you see the total revenue, that's 8,93,750 bifurcated by this way. So that's the way you have to plot the journal entry for each and every month. If you are going to do the combined entry for that, you have the option for that as well. If you are booking the invoice from the AR standpoint, this is the flow is pertaining to the ERP. If you are booking in ERP and you have the different team, this accounts receivable team is different and R2R team is different. And if you want to combine this, if you want to do the consolidated entry, then how you're going to do that? This is the first is going to be as it is as on 31st December 24. I'm going to do the reversal for that. Or if you're going to hit here as a straightway to the revenue account, then how you're going to do the entry for that. So when you are booking this invoice as on 23rd Jan, so you have the option, if you have the scope to do the entry manually, and if you are booking, then you can do the consolidated entry here. So how you're going to do is that for that, that's also you will discuss this 10,54,000, that's total is going to be recoverable from your customer. Revenue is going to credit, that's a 2,75,250. IGST will take at last. Now to your unbilled revenue account, that's an asset account credit, that's going to be your 68,000. To your deferred revenue, that's going to be account credit, that's a 5,50,000. And to output IGST, that's your 1,60,000. This is the way you are going to do the entry in consolidated one, if you have the option. If you don't, and the AR team is different and your R2R team is different, then your entry is going in this way from the ERP standpoint. And if you are doing the entry at your end, then you can do this entry. And the deferred revenue and unearned revenue, both the terms nomenclatures is going to be the same. So you can credit to unearned revenue, or you can credit to deferred revenue. So this is going to be there as an liability on us to defer revenue for 5,50,000. And when you are going to reach in the next month, so the entry is going to be the same. There is no any excuse for these two transactions. So if you have the options, then you can go with this combined entry. But if you don't, then you have to do the manual entry. Instead of that manual entry, you have to follow the ERP and you have to do the entry in this way. And you have to do this way itself, because in revenue, you are going to reflect in that particular month has 8,93,750, and that's going to be used for your tax compliances, your GST return. If you are going to say that output GST is 160 and in P&L you have only the one, if it's credited 2,75,000, then you are going to do the reverse calculations on that. So instead of the ERP works in this way, it's straightway going to hit to your P&L as 8,93,750. You have to do the reversal of unbilled, and you have to take the reclassification entry for deferred revenue. And again, you have to book the revenue by every month as per the delivery of services. So that's all from this. I hope you got more insight about this, how the questions is going to be now and how you have to give the answer for that. In one question itself, your knowledge about the deferred revenue, unbilled revenue, and the journal entry, plus your AR knowledge, plus your GST knowledge, everything is going to be the cover here. So you have to do the focus now in such sort of questions where in one question is going to give the more than 2 to 3 concepts knowledge, and you have to ask the questions in that way as well. So that's going to give the benefit to you to enhance your skills. And when you're discussing in a multiple way on the same time, and you are going to involve in that transactions. Now we are not going to club here again how you're going to do the entry in Accounts Gurukul books. And that's also is going to be one of our fantastic content. But now we'll stop here towards the service receiver standpoint, and it's going to be covered in another content related to the service receiver standpoint, how it's going to work. Then your concept is going to be the more clear. So thanks guys for being with us, and thanks for that one of our member or viewers who ask us to create this content, and this is going to be one of the good help to all of our viewers as well to enhance your skills. So thanks guys for asking this to create the content. In addition to that, request all the viewers to like, share, and subscribe our channel. This is the one which is our YouTube channel, that's Accounts Gurukul. Again, keep loving, keep supporting, and keep following this Accounts Gurukul and Santosh Phulse. Thank you.